Hi, Greg Weldon here. We're going to talk about the bond market. 2 minutes. Give me 2 minutes to tell you about the bond market. We're talking about public debt. 36 trillion. It's up 14 trillion just from 2019 alone. It's up 300% since 2007. You can see the angle of ascent accelerating to the upside. According to the Peterson Foundation, 9.3 trillion in debt matures in the next 12 months, throwing 1.4 trillion in public borrowing that needs to be done in the last 5 months of the fiscal year. These are enormous numbers hitting the market, let alone that you have almost 17 trillion maturing in the next 5 years, let alone interest costs over $1 trillion now and projected to be 13.5 trillion over the next 10 years. Unbelievable numbers. And we're already in the black hole in terms of debt. Once you're in the black hole, you don't even know it yet, but you can't escape the gravitational pull. No matter how much propulsion you put forth, you can't escape the black hole. The propulsion is money. We are burning money as fuel to try and get out of this black hole, but we're past the point of no return. We just are. You're talking about when we add household debt to this number, it's 54 trillion. I mean, you're talking about 186% of GDP, $1.86 in new debt to be created for every dollar in new growth we got to achieve, and we need the growth to service the debt. It's that cycle where we're trapped. So the bond market, 40-year downtrend, since the Paul Volcker defeated inflation. Let's break it down. Seriously, break it down. Paul Volcker defeats inflation with really high interest rates, right? Reagan comes in to be the president, and you have this revolution because now you have no debt, so you can spend money, all right? We outspent the Russians. We beat them in the Cold War. Then the Plaza Accord in 85. I remember that day very distinctly, getting on a train to go to New York City that Monday morning after the Plaza Accord was a Sunday night. Knocked the dollar for a loop, and that really started this whole big revolution that was technology-based. You had price discovery, which was major disinflation, right? All kinds of different things, the Clinton budget years, through the housing bubble. And then you come to 2008 when everything changed. If we go back to this chart, where did everything change? It changed in 2008 when this started to climb back and this gap was eliminated. So this goes to QE, started all of this back in 2008. We've seen the perpetual move ever since then, all right, to the point where the pandemic generated another 8 to 9 trillion in new debt. And here you are. The 40-year downtrend has been broken. It is a new trend to the downside here in terms of higher highs, higher lows in inflation and interest rates. The bond yield poking above 5%, about to break out, yield curve steepening. The dynamic here is, you have a big problem going on here. And this is why gold is higher, the dollar is lower, and this is also why Bitcoin is rallying as the bond yield takes out 5%. Is it a coincidence that the last time we got above 5% in the 30-year bond yield was the last time Bitcoin was above 100,000? Think about that. Get the full 60-page chart back. Shoot me an email, Greg Weldon at Weldon Online.